Hello everyone, welcome to my channel. Today we will understand the first chapter.
The name is Introduction to Accounting. Okay, before understanding the meaning of accounting, we will understand the process or characteristics of the accounting. Okay, so what is the process and characteristics of accounting? Because it is very important to understand this before understanding the meaning of accounting. So, you can say process or characteristics of accounting. Okay, so very first step is identification of financial transactions. Okay, this is the very first step. What we have to do is we have to identify the transactions which are of financial in nature. This means we have to determine what to record and what not to record. Okay, so we have to identify the financial events, okay, to be recorded in the books of account. For example, we see this is the person, Mr. Shyam. Okay, he has started a business. Okay, so he had two transactions. He paid electricity bill for his home, where he paid 24,000 for purchase of machinery. Okay, so these two are the transactions what Shyam did. Okay, so now here in the first step we have to understand what is financial transaction and what is not. So here we see that he first of all he paid an electricity bill for his home, and he paid 24,000 for the purchase of machinery. So financial transactions are those transactions which are related to the business, okay, which we invest in business. So here Mr. Shyam one invested for his home, the personal expense. He paid electricity bill for his home, means this is a personal expense. He is not investing at his business. And the second transaction is he paid 24,000 for the purchase of machinery, which is related to his business. Okay, so if whether these two will be recorded in transactions, no, this will not be recorded in transactions. Only this part will be recorded in the business transactions, right? Now come to the second process. Measurement in monetary terms. Okay, it means if any transactions are related which cannot be expressed in money, okay, or will not be regarded as the business transactions. For example, if we take example 1, Mr. Shyam loves his business very much. Now the second example is Mr. Shyam invested additional money to expand his business. Money expand his of rupees 1 lakh. Okay, so there is a two example we can understand by this. So first example is Mr. Shyam loves his business very much. Here we can see that it is not expressed in monetary terms. Means it is not written that Mr. Shyam loves rupees 100 to his business. Mr. Shyam loves rupees 50 to his business. So it is not expressed in monetary terms. So it will not be recorded in business transactions, right? In the same way, Mr. Shyam invested additional money to expand his business of 1 lakh. It means it can be expressed in terms of money. Are you getting me? It can be expressed in terms of money. So this will be recorded in the business transactions, right? This is the second step. Now the third step is recording of transactions. We have understood what will be recorded in transactions. Only the financial transactions, financial in nature, and second monetary terms. Okay, if these two nature will be satisfied, then only that transaction will be recorded in the books, and that book is known as journal, right? This is the third step. Now the fourth step is classifying. After recording the transactions, for example, transaction 1, transaction 2, transaction 3. After recording this, we have to classify the same type of transactions in the one batch. Means if this transaction is of purchase, and now transaction 4 sales, transaction 5 sales. So these three are of same nature. So it will be recorded, it will be classified in one batch, that is purchase, right? And the another is of sale, it will be recorded in sales book, that is sales. Okay, so here we have to classify of the same nature, and this is known as ledger. These are the very key points we have to remember. Further, I will discuss all these key points. Now, number 5, summarizing. We have seen in the previous step, for we have classified all the purchase in one batch. Okay, all the sales in another batch. So what we do in summarizing is we just sum up all the same items and we just write the gross total of all these items. We just summarize all this. Okay, so whatever the amount will be, we will just sum up here. If for sales we say 10,000, another sales is of 30,000, so the total sales is 40,000. So we will just write 40,000. We don't have to look back how many sales transactions are there, how many purchase transactions are there. Just in summarizing process, we just summarize all the same type of transactions. Okay, so this is the fifth step of summarizing. Now number 6, analyzing and interpreting. After summarizing, what we do, we just analyze all the transactions recorded. So here we just prepare PL account, trading account, balance sheet. we just analyze by recording all the transactions, and here we see whether the company is earning profit or not, whether the items have been traded, which have been recorded in trading account, and we will see the financial position, what is the position of the company, whether it is in earning position or whether it is in boom position or recession position, whether it is profit earning position or it is loss incurring position. Okay, so these all are done with the help of all these three account. Okay, we will just analyze here and we will see the result thereof. And the last step is communicating to users. Okay, after preparing all those, we will just prepare what we have prepared: PL account, balance sheet, trading account. Okay, after preparing all this, we will just communicate to the users. We will just show them what are our positions so that they will invest in a company. Okay, we will just show, we will just connect to them. So users, here users are of two types. Okay, one is internal and the other is external. I will explain you all these two terms in the next very class. Okay, so just remember the process, that is communicating to user. The last step is communicating. After preparing all the PL account, balance sheet, trading account, we will just communicate to the users, and the users here are internal and external users. Okay, so we will revise what was the process. The first step was identification of financial transactions. The second was money measurement. Now third is recording. Number fourth, classifying. Number fifth, summarizing. Number sixth, analyzing and interpreting. Now number seven, communicating to users. Okay, so how to remember all these seven very steps? So I will just tell you the mnemonics of all these. It will be just remembered in a few seconds. So identification, just will remember the I, money measurement M, recording R, classifying C, summarizing S, analyzing and interpreting A, communicating to user C. So what it came, the result is IMRCSAC. This is the mnemonic. You just remember this mnemonic, you will be able to remember all the steps. Okay, so this was the very step to understand the meaning of accounting. So accounting is an art of recording, summarizing classifying in a significant manner and in terms of money transactions and events which are in part at least of financial character and interpreting result thereof. Okay, so this is the definition of accounting, very famous accounting. So we'll just, what is written here: recording, summarizing, classifying in a significant manner and in terms of money transactions, events which are of financial character and interpreting the result thereof. So it is very, very clear. That is what is the meaning of accounting. Okay, so this was the meaning of accounting, and I have explained you the characteristics of accounting. That is also known as process of accounting. So now we will go to the objectives of accounting. Okay. Objectives account. First, accounting is systematic and complete record of financial transactions. Okay, so first objective, what is the first objective? It helps to keep in the all the transactions in very systematic and the complete order. Okay, in a very chronological order. So the first objective is to record the transactions in a systematic manner. Now the second objective is to ascertain profit or loss. Okay, so the second objective, as we are recording all the transactions in a very complete manner. Okay, so at last the process we have remembered, that is analyzing and interpretation. What we do there, we just prepare PL account, balance sheet. Why we prepare PL account? Just to ascertain the profit or loss, whether the company is running in the profit or loss. Okay, now the third is to ascertain the financial position. Okay, the third objective is to ascertain the financial position of the business by the means of financial statement. And the word financial statement is there, balance sheet. Okay, balance sheet, where the balance sheet, the left hand side, it is shown as capital and liabilities, and the right hand side, that is shown as assets. Okay, this is the balance sheet. From here we know the financial position of the company. Now the fourth objective is useful for accounting information. Accounting information. Okay, so it is very useful for the investors, owners, banks, employees, and government authorities who want to analyze them or who want to invest in this company. So it is very useful for those users. Okay, so these are the users, owners, investors, creditors, banks. So these are all the users. Now the second, the now objective is to provide financial information to management. Okay, so it helps to provide an information to management, because from this basis they can take a very right decisions, and helps in budgeting or forecasting for the future on the basis of the previous or historical transactions and events. Okay, so these are all the objectives of the accounting. So what I have discussed, the process, the meaning of accounting, and the objectives of accounting. Hope
You like this video? Do subscribe my channel, and bye bye. Have a nice day.